Okay, everyone, welcome again. This is Karina for all of you with the lesson number 8 with price action for all. And today's lesson is not live. I'm recording this, and then Caro will send it to all of you guys. You know, market conditions today were a little bit rough, so I couldn't make it on time, and I decided to record it afterwards. You know, this rates of Europe coming this week on Thursday morning, and Lagarde already said that get ready, and the market is trying to discount the impact on interest rates this Thursday. So yeah, market conditions today were a little bit interesting. Anyway, so here we are. Today's topic, I will let you go through the price confirmation to buy, price confirmation to sell, and also when you can actually trade without the confirmation. Okay, so I understand that most of you that are actually having access to this information are actually in the market, and you might be a little bit tight under these market conditions, so I'd rather go right to the point and give you, you know, straight information in how you go with confirmation prices and no confirmation prices. Okay, so again, we've been through, we already talked about many of the major things of the book, you know, preparation, price action, equilibrium prices, the trend, market areas, historical levels of the euro, the pound, gold, you know. So we've been through, you know, most information that is actually a key to understand the topic that I'm about to talk to you today. So for the information about how to identify confirmation prices and non-confirmed prices, I'm gonna need you to get through candlesticks also. So for some of you that are pretty new here on my channel, maybe also with my book, if you already bought it, or you know you already got it, but you haven't been able to get to page 42, I'm going to go through how candlesticks are actually the most helpful, you know, information and tool, I'm going to say tool, that we can have to understand price activity. Okay, so again, we don't use indicator like some traders do. We only read the market prices. Okay, so on this segment, I'm going to say that maybe this is the second most important pieces of information with price action. When can you trade without confirmation, and when you can trade with confirmation markets? And today's market condition, it was actually very, you know, perfect to give examples about confirmation prices and not confirmed prices. Okay, so I'm going to go to page number 2 so we can go really quick about candlesticks, just in case you forgot how candlesticks are made, or you're kind of confused between patterns of candlesticks and how candlesticks are actually shaped on the charts. Okay, we don't use charts in price action, but we use these tools, you know, because actually the candles, we use them to understand the volume inside them, not actually to see and read the patterns. And I understand maybe some of you are already obsessed with candles, because I was actually too. On my first year, you know, we all went through this book, Steve Neeson, about candlesticks, and it was actually a pretty good book in terms of how to get an introduction with chart activity. But then you realize that it's not such a thing as understanding patterns to trade the market. So that's why we're here. All right, so I'm going to go to page number 2. There's a few draws, a few, you know, candles there that for you to get through candles. But again, I understand if you want to see all the patterns, and there's not such a thing as patterns here. We only read the volume of candles. We only read the volume of candles. And what we actually care in candles is the closing of it, not the shape, not the opening, the closing. Only the closing of the candles is going to give you enough insight, enough information for you to go and understand when can you buy and when can you sell. So I'm going to go really quick. This map price and page number 2. You know, this is introduction about candles, and here we are. So you know these things, you know them already. You've been using them, of course. But again, the only difference here is that we don't really care of the shape they have. You know, we don't really go for it. We only go for the closing, okay? Because again, inside the candles, you have people trading, you have the volume. You know, inside the candles, you have the volume, and that's exactly what we actually need to know. When do you have volume into sell, and when do you have volume into buy, into sell prices and into buy prices? Okay, so we have here, this is a sell candle right here, and of course it has to open above and it has to close below, because this is going to be full of sell contracts, sell CFDs, sell whatever you're trading with. Okay, this information of confirmation prices and no confirmation prices, you can use them with stocks, crypto, FX market, commodities, anything. And of course, the buy candle is the opposite. It's going to open down here, it's going to open below, and it's going to close above. Okay, so it's quite simple. You know, candles are the most important shape. I'm going to show you here my platform. The most important shape of charts, because you have line charts, you have the open and close charts, you know, all of this, and we don't go for this because it's not they don't provide enough information. But instead, candles are, you know, pretty old system, actually, very old system, but still useful. The difference is that now we don't use them like 10 years ago, maybe 15 years ago, that you can actually count on some patterns to make decisions. You know, today the market complexity and the, you know, volume of markets are actually more aggressive. Volatility is a big situation also in markets today. So just don't go for patterns. You know, there's not such a thing as, if you understand all the patterns of candlestick, you're gonna be safe, and you know when you have a doji, when you have soldiers, when you have hammers, what to do with the market. You know, it's not working like that. So anyway, just to make sure that we are on the same page here, because I'm not going to talk about, again, patterns and hammers inverted and all of that. You know, it's not such a thing. We only care about the closing. So in sell candles, we cared about this, the information of the closing, and in buy candles, we cared about this, the information of the closing. And the reason is because when you start trading and you already understand prices, for example, you know that euro dollar is trading into buy levels around the 117.70 and the 118. So you kind of now see and understand price activity, but you're missing the part of where can you actually buy and jump in the market, and when do you have to wait the market to tell you exactly, you know, yeah, we're buying so you can buy, or yeah, we're selling so you can sell. You know, so some traders that get into price action, they end up to the point where they get a little bit confused, and they kind of tend to move before they jump in the market, before confirmation, or kind of missing that piece of you know, of the strategy. Okay, so you know, sell candle, buy candle, we care about the closing prices, and that's it. So I'm going to use the market today to show you when can you buy without confirmation and when you can buy without the, with confirmation and without confirmation, because today was pretty tough for some traders that they were actually new in my live trading sessions, and they were like, wait, what's confirmation? Wait, what are we waiting? The market is going up, and like, you know, stuff like that. Because I see the chat, you know, I see the chat when I'm doing my things, I'm doing my trading, I explain the situation, I explain what we're gonna do, but maybe they did not went through some of the educational videos that we have. And so they try to just copy what I do, and sometimes you need to have some insight and understand why am I buying and why am I selling. Because it looks pretty easy, I make it look easy, but behind the analysis that I'm doing, there's all this situation going on, and I want people to actually understand it and do it the same way. So let's go ahead and go for the euro dollar today. And this was the situation of the day. So first of all, you're going to use candles of 1 hour, 4 hours for the analysis, right? Because always you have to just move back a little bit. So when you move back and you go for 1 hour and 4 hours, you have the very important insight of the market. And then we go for 15 minutes. So every candle that we use on the scalping on intraday basis, we use the 15 minutes. We use the 15 minutes. Okay, we don't use time frames like 1 hour, 4 hours. We use the 15 minutes. Okay, so every closing over 15 minutes candles is going to give you the confirmation, right? Confirmation or no confirmation of what to do. So let me show you the euro dollar today. I'm going to go for 1 hour time frame so you can see how the market opened and how the market closes today, how it closed today. So this is the situation. This is European opening hours. This is the lows of the day. This is the US opening hours, Europe opening hours. And then the US pushed the euro all the way up to here. This is the high of the day. This is the low of the day. Again, it was a tough day. It was a lot going on, but it's actually beautiful. I mean, it was perfect for us. But I'm going to explain the kind of confusion that I kind of noticed in some people. So again, we have Europe opening, US opening right here, the low of the day and the high of the day, and this is the euro dollar now. So we all know that if the market open for sellers, we rather sell. We go with the flow. We go with the sellers. If they open for sellers, we go with the buyer if they open for buyers. And that's what we did. We went for the seller, and then when the US opened, we actually took a little bit of time to buy. And let me show you how we did this. Because we all know, I'm going to move to 15 hours now to tell you what exactly confirmation means and when you can use it and when you shouldn't wait for the confirmation, because you're gonna miss the opportunity. And today was one of those days that we actually traded with confirmation and no confirmation. So this is again, we had some buyers at the lows and then some buyers also at the lows here. So we were kind of playing at the very lows of the day. So down here, we did not go to sell anymore. Like we couldn't sell anymore because I said, you know what? The European session is just trying to buy, not enough power to buy, and it's going to test again the lows right here. So that's what happened. And then we have some buyers. This is the US market, US market, US market, and of course, plus the European market. So it was the overlap. And then they decided it all the way. They all went for the buyer on the euro because this is the opening on the European market. So once we cross that price, it means all the market was actually into the buyer. So we had two situations here. When we were here at the market, I said, you know what, we're waiting for the confirmation on the euro to buy. And I was waiting for a very specific price, and the price that I was waiting for, it was 117.70 and the 117.80, because actually, if you see this, I was like, no way we are going to buy the euro today. So I said, you know what, we need the confirmation to see if the buyer today is strong enough so we can trust the buyer and go after the 118 and the 118.20, because that's the market levels that we were in. But in the middle, we had the 118. In the middle, we had the 118 here. That's the 118. So two things here. We waited for the confirmation here, but then we enter on the second confirmation because I said, well, if we have one buyer, one candlestick of the 15 minutes above the low of the day, we're going to start having more buyers. So we have this closing right here and this closing right here. So I'm going to take my crosshair and then I see this closing on these buyers on the euro dollar here. If I measure the price, is at the 117.70. So it was a good price. It was already a buy level. But then I say, you know what? It's too early. And we are below 118. So why don't we wait for another confirmation? Actually, another price that is actually far from the lows because it was actually the first buy of the day, kind of risky. So then we have this closing right here at 117.76, and then I say, you know what, we can jump in and buy. And our target, it was 117.90 and 118. But if we see the 118, it was actually here. You know, the 118, I'm going to put a line into it, 118 right here. So there's two things here. First, when you have the opening market hours into sellers, you have to think into sellers. You cannot think into buyers. So sale days, sale opening hour days, sale days, you know, like all the market is selling, you need confirmation to buy. You need confirmation, like you need confirmation. You cannot just buy because this is low, because it's touching a buy price. One thing the market is gonna, you know, one thing is attaches the buy price, and a different situation is that the market giving you the confirmation that they are actually buying, and that's what we had the 117.76. Everything turned to be right because we waited enough confirmation. We did not jump here, we jumped here. So basically the price above the buy level of the 117.70. And our target, again, it was actually, we hold it up to 118. Okay, so this is very important. Sale days, you need confirmation. Sale days, you need confirmation to buy, to trade the opposite as the order flow of the day. If the day was actually into buyers and we were buying, you don't need confirmation. And that's exactly what's going to happen tomorrow. So we have here the euro dollar, right? We have the 118 very close to us. And let's say that tomorrow the European market opens for buyers instead of sellers like today. So we have tomorrow the euro above the 118. They open for buyers. And then you see, you catch on the market, depending on the hour that you get on, you know, you get online, whatever, and then you see at 118.10, you see it at 118.20, and then you don't need a confirmation. You can just buy at any level of this because your actual target is 118.30/118.40. You see the difference? So if the market open for buyer, you don't need confirmation. No need of confirmation. So you can just buy at any level, but be careful with your target because you need to have enough room to reach your target and to make a profit out of it. You cannot just buy here at the end of the market level, of your market range. You must buy 118, 118.10, you know, so you can reach out the targets in the area. Let's say that tomorrow the market open for sellers again. Well, we have the same situation. Same situation, below the 118 is going down to 117.70, 117.76. We wait for the confirmation about 17.70. We buy. You read to 118/118.20 last target, so you know what to do. Okay, when the market open for sellers and you want to buy, you need the confirmation. If the market open for buyers and you are above a buy price like 118, 118.10, whatever level it is, you can just jump because you're not going to have time to wait for the confirmation, because maybe it's going to happen like this, you know, touching the 118 and going right to the target 118.20. So you're going to miss the profit. And this happened within like 10 minutes. This is 15 minutes here and then 15 minutes here. So in 15 minutes, less than 15 minutes, we're actually closing the buy on the euro. And then what happened is like it came back down to here, and we have a little consolidation going on right now, but we know that we can't do anything at this point. We have to wait for tomorrow's opening hours. Okay, so if tomorrow again the euro opened above 118, you know what to do. That's your target. That's your second target. If tomorrow we have the market opening for sellers below 118, you already have these references, you know. You know where to sell, you know where to buy, to wait for the buyer at 17.76 up to 118/118.20. You see? So it looks pretty easy, but when you're in the market and you don't know, you know, it's easy when the market is It's done. It's closed, and everything looks, oh yeah, I was going to do that anyway. It's not such a thing, and we know that. We know that. So one thing is to decide when the euro is going down like that. I was looking at the 117 here, honestly. I was not expecting these buyers. So I said, and everyone just starting to get crazy and anxious. They say, let's go buy, let's go buy, let's go buy. And I say, because that's also my job, just calm down. Look at all these sellers. We don't know if this is anxiety of the buyers trying to buy or these are real buyers. If this is the real deal, we're gonna know. We're gonna know. That's why we waited enough confirmations. Okay. So I just want to take you out of the chart and show you really quick the how you understand the market levels, how you understand the confirmations. Okay, so remember that the opening is what you have to pay attention to. Opening hours. The first hour of the opening, either if you are on the European market or the US market, it's going to tell you everything. The first hour. If you missed the first hour, you have to wait for the next 15 minutes and then check in every 15 minutes what opportunity comes along. So if it is not that clear for you on the opening hours, you'd rather don't do anything. Rather don't do anything and wait for the next opportunity or the next 15 minutes and so. Okay, so here, just make sure that you understand also map price, because we talked about it on the previous lessons. Map price. Okay, so you know how to make the configuration of those levels, those prices, right? Because on the book is everything. The book has the transition levels, the market levels, buy levels, sell levels, and the map price of the majors. And I think I have also gold. I don't have silver though. How it works, and the map price, you can do it yourself, and at least that's my goal. So I give you the tools so you can set up the map price on everything, on stocks, crypto, whatever you like. So euro dollar, 118 after target, 118.30, 118.50, and then 119. Okay, what is going to give the exact strategy is the opening hours. If the market open for buyers and you are here, you know what to do, what your targets are. Remember, the market is going to give you some of the market range, some of it, of the market range, not all of it. So on one day, you might have 118 to 118.30. That's it. Next day, 118.30 to 118.50, possibly 119. That's it. Market range, you had to keep it real, because the map price gives you all the information, but you already know that depends on the volatility of the day, depends on the volume of that specific day, you know what to expect. So today, like euro dollar was a little, it was a lot going on, and it was not information, it was not high impact information today, like nothing, no employment, no rates, no nothing, and we have all of this. But we don't have all of this every day. So tomorrow we might have only up to the 118.20. That's it. And above the T20, you have to close the buy, and then if you get through it, to buy again towards the 118.30 and 118.40. Keep it real. Okay. This is scalping. Scalping works like scalp a little bit the map price of your instrument, the one that you're trading with. Okay. So just don't go for all of it. Take it slow. Scalping, or the challenge of scalping, is to do small entries with the most important, with the highest possible control of your entry and the less exposure possible. Exposure means time in the market. Exposure means time floating, your trade floating. Okay, so the less time in the market, the better. The fastest you are, the better. So keep it real. You know how much the market can give you on a daily basis. So, and this is the pound dollar, for example, a complete different situation. The pound dollar went all the way down. We have a consolidation. These are the lows of the year. This March information down here. So we don't know what the pound is going to be about tomorrow. We do expect the buyers, but today the pound closed for sellers. Nobody was buying. Nobody was buying today the pound dollar. So we decided not to sell, not to buy. We're gonna wait for tomorrow with pound dollar. We couldn't do anything. It was just too flat, no volume, no confirmations, no nothing. Okay. Well, this is silver, waiting for the buyers. This is gold, waiting for the buyers. We actually got to buy gold and we closed it. And every instrument, it works exactly like that. But again, I don't want to go through the market. I just really want you to understand the fact that when can you actually trade with confirmed prices and when you can actually trade without the confirmation prices. So all is everything depending on the opening. If the opening is again with the pressure of the levels that you are into, much better. But when you want to enter the market against the pressure of the opening hours, that's when you need the confirmation. And not any confirmation, like you have to wait enough. If you're not certain on the first confirmation, wait for the second one. Okay, so again, if you see down here, I give you a quick explanation, but this is what matters to you. You know, this means confirmation. Let's give an example with gold, for example. Gold is trading around the 1800 and 1820. So we all know that it's going down to 1800 and then going for 1820, 1800, 1820 is doing so. We had some sale days that gold was trading below 1800. You know, so we saw gold at 1890 and I'm sorry, 1790, 1795. And then I have also people here all desperate trying to buy gold. Then I said, wait a minute, we do not have the confirmation yet. We do not know if gold is going to go after 1820 again. You cannot assume that. You know, there's no such a thing as assuming that it's going to do something. So we waited long enough, and then this is exactly what you're looking for. This formation right here on the 15 minutes time frame, let's give an example that instead of 1300, you have there the 1800. So that's the confirmation. When the candle crosses above the price and closes above, then you say, okay, now the market is buying. They were not buying here. That was a mistake. They were actually confirming above the 1800 there. Okay, so make sure again that you understand the fact that you cannot just buy because you know that is a buy level. You buy because you have enough insight and information that is giving you, and then you say, okay, that's a moment. I'm jumping in. I'm jumping in. You know, because especially if you have a sale day on gold, right? It's getting through the 1800, and there's no way. I mean, it's gonna do some consolidation there, but then it's not just because it's around the area that you can jump in. If the opening hours, it was actually into buy opening pressure, and then you have buyers of the opening hour, and then it's getting through the 1800, then yes, I'm gonna say you can go ahead and buy without the confirmation. But a sale day, trying to buy that thing, it means you need the confirmation. If it is a buy day and you try to sell because it's at the very highs, you need the confirmation to sell. It actually works the opposite. Buy days and you try to sell because it's at the highs of the year, highs of 2 years, highs of the month, whatever high you are considering, and you want to sell, you need the confirmation to sell. That's when you have the most risk, trading against the opening pressure, trading against the opening hour situation, because it's like, this is order flow. If they're open for buyers, then what are you doing? What are you doing trying to sell? If they might be open for sellers, what are you doing trying to buy? Just go with the flow. Okay, so that's pretty much the topic of today. And this is a good exercise that you can actually do. You know, just grab whatever instrument you like, and every 15 minutes, try to identify the closing of the candles every 15 minutes and check the confirmations that you have and what confirmations you don't have. And, you know, working with the demo account if you like, or use your trading account and make notes first, ideally, So you start noticing the difference between buying or selling with a confirmed price or buying and selling without a confirmed price. You're going to see the difference on your decision-making process and how good you're going to get at waiting for confirmations when you have to wait for confirmations and not waiting for confirmations when you don't need them. It takes practice. But again, if you start doing the exercise with gold, silver, oil, you can use WTI or the UK or the Brent or whatever instrument you like, you're going to start getting really good at it. You're going to start really identifying what levels you can take, confirmed, what level you shouldn't, so it's a pretty good exercise. And that's how we all started it, actually. We all just first practice, confirm prices, not confirm prices, and you write down, okay, I'm going to buy here, I'm going to close it there, using the map price, because the map price gives you what levels you buy, what levels you sell. What I'm giving you now is the what is complementing that process of identifying buy levels and sell levels. And this is it. This is the candles. That's all you need. Every 15 minutes, checking buy levels, checking sell levels, and what you should do with that information. And then once you feel, safe enough with that practice, then you can jump in and do it in your trading real account. It shouldn't take you too long. I mean, if you're good enough doing exercises like this, within, I don't know, maybe like 3-4 days, you have it. It won't take you too long. Because that part is easy. Waiting confirmations, no confirmation, that's an easy part. Okay, so that's all we have for today. And next class, we're going to talk about pivots. Okay, so first exercise this: confirmation, no confirmation, target, do the writing, and use the map price of the book so you know what prices you're going to take. Use the opening hours ideally, so you have a clear picture what direction of the market is taking. So it's going to be much easier for you to identify, okay, it opened for buyers, I'm going to buy, no confirmation, that's my target. It opened for sellers, I'm going to sell, no confirmation, waiting for target. I have buy levels, but open for sellers. I have sell levels, but open for buyers. That's a tricky part. When you have lows of the year, lows of the month, highs of the year, highs of the month. Okay, so I'm going to leave you this information. Thanks so much. If you have any question, you have the open comments down here. This is going to go to our channel, but again, this is only for you guys that you have the book. Okay, otherwise it might help you, but I don't think as much, because you need to have the reading of the map prices so you can apply this information. And if not, it's because you're really smart, and I know you are, so you can absolutely use this information and trade with price action, confirmed, not confirmed levels. Okay, I'll see you next Monday. Again, it's going to be about pivots, and hopefully it's going to be live, the lesson, and if not, again, I'm going to record it for you. But yeah, it works like that, depending on the market that day. So thanks so much. Feel free to have any questions and comments here down below the video. Bye-bye.